Hi class. Today we're going to be doing labor economics, part of Unit 3. Please check over your homework. Take a minute to take a look at these answers, compare them to your answers to make sure you have a good understanding of the previous lesson. And please send me questions, or if you have any concerns or thoughts about why maybe your answers are different than mine. So today for labor economics, we want to know how to evaluate labor demand and supply, be able to determine marginal revenue product of labor and know its importance, understand how the hiring decision may work and what impacts labor demand and supply. So success criteria talk about thinking about your own skills and doing the lesson activities, and then of course completion and review of homework. So labor economics. If I ask you this question of how are workers paid, I want you to think about some of the things that maybe conventionally as well as non-conventionally contribute to your compensation. So clearly things like money and salary are the easiest and simplest ones, but think about how maybe you might get a bonus, or people get tips, or even more, a little bit off the beaten path is expense accounts, right? You might take a job because you get an expense account, or you might be paid in stocks and shares. There's incentives, you get discounts, perks. I have a friend who has a full-time job and he continues to work at a clothing store because he wants the discount on clothes, right? So there are many ways that workers can be paid and compensated by the company they may work for. And so the question then is, what's going to determine how much you are paid? You know, how big of a bonus you get, or what your salary may be, or how much commissions you get, or what discounts you might get, right? So there are various things that are going to influence your pay scale or how much you get, right? And so those could be skill, your experience, your education, your age, your sex. Like if you are more highly educated, you might demand a higher salary, right? Someone may pay you less money just because you are younger, right? All these types of things can influence how much you get paid. Whether right or wrong, they are going to influence your amount of wage or what you may get. So think about what more closely determines how much things are worth. Okay, so we're looking at how much you get paid and what makes you worth that much. So think about it a little bit differently. Think about how much do you choose to pay for other things, right? Demand for the good or service, right? So maybe you want to buy a hamburger, right? You have a demand for that hamburger and you're willing to pay a certain amount of money to get that hamburger. And so can we think of labor or labor economics in the same way as we would think of any other product or service, right? The demand for goods is much simpler. You look at how much you value it and you are willing to pay for it, and so that amount of money directly indicates the value of that thing. However, labor demand is very different, because in reality, I have no demand for your specific labor. I have demand for what your labor can do. And so that's called derived demand. So derived demand is the demand for resources are dependent on the demand for the underlying goods and services. So when we think about how technology starts to replace workers, is because I have no longer have a demand for you, because I no longer need what you can do, right? So you are definitely paid according to what you can produce, or what your skill set is based on what that skill set can produce or can create, or how much people want that skill set because of how much people want that thing, right? If I can get that thing in a different way, I no longer have demand for your skill set, okay? And so labor demand is derived from what you can do, or what people want from what you can do. So the question is, why do some jobs earn more money than others? It's based on the demand for your labor, right? The demand for your labor is derived, and therefore is determined by the demand of the underlying good or service. Your labor demand is also determined by how productive you are. How much of that good or service can you produce with your labor, right? I can produce, something. My neighbor can also produce something, and so we have our derived demand is the same for that same good. However, if I can produce that thing faster, they may want to pay me more, right? And so that is what determines or what influences demand for your labor. One, it is derived from what you can produce, and also determined by how much of that thing you can produce. And so that is what we call marginal product, right? So marginal, we should already understand conceptually the additional, and product, it relates to what you produce, right? So the additional output created from one more unit of input. And in our example right now, we're talking more about labor, but it could be about any factor of production. And so that input is going to give us some more output or some marginal product. And so when we talk about labor specifically, we want to know what revenue comes from the product of our labor, right? So we're going to create a marginal product, and in reality that doesn't mean anything until we can sell it. And so what is the marginal or the additional revenue from that additional product? And so it's marginal product times the price it is sold at. And that money is produced from the input. So from that laborer, I get money, right? Ultimately, that laborer is going to make product, and that product is I'm going to sell it for a certain price, and that is going to be the money that I receive as a firm. So let's look at an example. And so here's the example. You sell Bibles for $5 a day, or $5 each. By yourself, you can sell 100 per day. If you hire one worker, you can sell 150 per day. If you hire a second worker, you can sell 180 a day, a third 200, a fifth, or I should say a fourth, 205. So here's our example. So 1 unit of labor, that's yourself, you can make 100 product. So with 2 units of labor in total, my total product will be at 150, right? So fill out the rest of this column, and as you can see, you should be at 150 at 2 people, 180 at 3 people, 200 at 4 people, 205 at 5 people, okay? And so from here, what is our marginal product? And so take a minute, pause the video, and fill out the rest of this table. So hopefully you're all done filling that out. So the marginal product, what's the product that I get from the one worker, yourself? 100. What's the product from the second worker? So by yourself, you made 100. With 2 people total, you got 150. So the addition of that second worker only gave you 50 more product, okay? And then 150 to 130, the third worker gave you 30 more product, the fourth worker gave you 20 more, and the fifth worker gave you 5 more, okay? So that is your marginal product by worker. And so the marginal revenue product of labor is how much money or how much revenue did that marginal product give you, or did that extra worker give you? So by yourself, you sell 100 per day, and Bibles sell at $5 each, and therefore 5 times 100 gives you a 500. 5 times 50 gives you a 250. 5 times 30, 150. 5 times 20, 100. And 5 times 5, 25. And so the first worker's marginal revenue product of labor was $500. The fifth worker's marginal revenue product of labor was $25. So as you can see, each additional unit of labor is actually giving you less and less and less marginal revenue product of labor, right? And that's due to diminishing returns, right? We are going to get less and less and less from every additional input that we give, okay? And so the question is, if you pay each worker $100 a day, does it make sense for you to hire the fourth worker? So let's look back so we can see our chart. This fourth worker makes us $100 per day, okay? And so the question again is, do we want to pay that person $100, right? What is our profit maximization formula? So we're going back a couple lessons. We want to produce and sell until marginal revenue is greater than or equal to marginal cost, okay? And so in this scenario, our marginal cost for that worker is $100, and our marginal revenue is marginal revenue product of labor. So yes, because that worker makes me $100 and I pay them $100, I'm still willing to produce at that level, okay? Will I hire the fifth worker? That fifth worker makes me only $25, and so therefore spending $100 to hire them doesn't make any sense because my marginal revenue is actually less than my marginal cost. So if you understand marginal revenue and marginal cost theory, the marginal revenue product of labor shouldn't be that big of a stretch. So please reflect on this information and kind of review this material to make sure you can go through this process. So now we're going to look at what influences the demand for labor and the supply of labor. And so again, we have to remember that demand for labor is derived. And so what is going to shift that demand of labor? And as laborers, as workers yourselves, you should be keenly aware of these things and be interested in them. So one, change the demand for the product, right? As the demand for what you can produce increases, the demand for you should increase, right? If the demand for cars increases, the demand for auto workers should increase. Right, so lots of people talk about how students these days are being educated on jobs that don't exist yet. So that becomes very difficult to prepare for, to gain skills for, right? Which is why you need to be adaptable. You need to be very fluid in how you learn and understand and be able to change your skill sets because you want to be able to be well positioned to do what the market in the future asks of you. So if your skill set to do something is good, then your demand for you will be also good. Next, change in price of other inputs. If the price of capital goes down, then the demand for labor will also go down because capital is comparatively cheaper now than it was before, and so more firms will want to hire capital or buy capital instead of hiring more laborers. Okay. In the same way, if the price of capital goes up, the demand for labor theoretically could go up. And the last one is a change in productivity of your workers, right? So if you as an individual become more productive, then the demand for you should also go up. If you can produce more faster, if you are able to do more in less amount of time and produce more product, your marginal product will go up. Therefore, the marginal revenue product of labor should go up. And remember, they will hire you as long as you produce more money for them than you cost. And so if you can continually raise how much revenue you produce for a company, they can theoretically pay you more and more and more and more. Okay? So these are the things that generally influence and dictate the demand for labor. So now we want to change gears and look at what impacts the supply of labor, what impacts the willingness for people to supply labor. And so we have to understand the market for labor, the labor supply curve is how many people are willing to supply labor at each wage rate. Okay, so this is just like a similar supply curve. You should all understand it. That's the supply of labor. So why would someone decide not to work a specific job? Right? You could all probably go out there and get a job, but the reason why you don't work that job is the opportunity cost. Right? What could be earned at a different job? What could be done instead of working, which could be leisure, which could be school, pursuing something else, right? All these kinds of things are reasons not to work. And so any of you who don't have a job, there's a reason for that. You've chosen not to have a job because either you want to relax or you want to study more or whatever it may be. And those of you who have jobs, it might be because you need money, it might be because you want experience, whatever it may be, you've all made this choice of labor supply. And so what's going to influence potentially that choice? So factors that shift our labor supply curve. And so remember, we're talking about shifting the curve. One is change in income taxes. Okay, so this might not seem easy to understand, but think about this. If your taxes increase, that means the amount of money you earn every time you work is going to decrease, and therefore you will decrease the quantity that you supply. And so I'll give you an example of my dad. My dad's retired now, but when he first retired, he was making his pension, so he got a certain amount of pension money, but he still wanted to work. And so he would work for his same company as a contractor, but he knew exactly how many hours he could work and bill to them before he entered another tax bracket. And so he didn't want to work that extra hour, because that extra hour he worked now is worth less money because he'd have to pay higher taxes on that extra hour. And so changing tax bracket would cause him to work less. And so changing income taxes will shift or will impact labor supply. Next, change in size or composition of population. Increase in population will increase supply of laborers, which will increase labor supply. So immigration law or the composition of the population graduating more people into the workforce, just thinking about people a different way. What if we change the age for that's acceptable for kids to work? All these kinds of things will change labor supply. Change in household technology. Okay, so we're not talking about changing in machinery on the workforce. We're talking about changing household technology in terms of time savings. So think about the Instant Pot. It's a fairly new fad. With the Instant Pot, people are able to maybe cook faster, cook with less stress potentially, or the microwave speed, or the slow cooker changes how you might approach cooking, right? So if you have increased time, a time-saving device, it frees up more of your time to work, right? So maybe you know that since I can fix dinner faster at home, or I've already prepared it, it's in the Instant Pot, I just have to press a button, maybe I can work at work an extra half hour. Or maybe my speed of my commute is going to increase the time I have available to work. I can get to work faster or whatnot. So all these things can increase your supply of labor if you have more time available. And the last one is a change in attitudes about work or the workforce. Thinking about increased acceptance of workers, women in the workforce, labor laws could increase supply of labor or could decrease supply of labor, right? So all these kinds of things impact how much labor is supplied. So that's today's lesson. So please make sure you ask me some questions, send me some messages, let me know if you have any questions. Thank you.